Hey guys, Joel Frank here, market analyst for YouTrading, and today we're going to be taking a quick look at a trade idea that I have for euro-dollar, which I think quite nicely ties together some basically bearish technicals with some bearish fundamentals. So let's take a look at the chart. And I'll sort of talk you through my thinking from a technical perspective first, and then I'll sort of discuss some of the fundamental reasons why I'm thinking things could also go this way. Okay, so this is euro dollar. We're on daily candlesticks here. You can see that the pair has pretty much more or less been in a downtrend all the way since February. Okay, and I've got the trend channels marked up here. You've got the upper bound of the trend channel here and the lower bound here. Which has pretty consistently provided support to the downside and resistance to the upside. Most recently, euro-dollar rejected that the top part of that downtrend, but also, by the way, guys, in red here and in blue here, you can see these two lines. That's the 50 and 21-day moving averages. So they're also acting as resistance to the upside. And I very much expect, and we'll go through the fundamentals in a moment, but I very much expect that euro-dollar is going to continue to depreciate within this trend line for the foreseeable future. However, obviously, over the last couple of days, we just had this pretty big move lower. On the last like 2 sessions, we dropped from like above 104 to current levels under 102, and that did see this pair is now trading pretty much at its lowest in, I think, more than 2 decades. And as you can see, the RSI here, the relative strength index, is now under 30. Now that means that, you know, that's pretty much telling us that euro-dollar has become oversold in the short term. And just looking at the RSI, I've gone back to look at the last pretty much 4 times that euro-dollar was oversold, and you can see that pretty much every time euro-dollar hit peak oversold, according to the RSI, there was actually a period of consolidation afterwards. So it happened back here in November 2021. We got to an RSI of like 25, but then we had this rebound that lasted into early 2022. Happened again in March. We got to an RSI of 23. That's very, very oversold. And then we had that slight rebound into the end of March. And then, yeah, you can see that happened again in late April and mid-May. These 2 times here, we had kind of consolidation and then a bit of a rebound. Now, I'm not saying catch a falling knife for euro-dollar because it could potentially have more room to drop towards the bottom of this trend line. That certainly is possible. There's that parity level here, which everyone's been talking about. So I'm not saying it's not going to hit that in the next couple of days. But what I am saying is that it is likely that at some point, because the pair is so oversold, we are going to see some kind of consolidation, some profit taking that might see the pair recover. I think the area we could recover towards would be these previous lows, which are around 103.50. In this area here, once we, you know, if we do recover back to that, that might be an area where the bears want to reload on their short positions. You know, you got the top of that trend line coming in. You're also probably going to have, I mean, the 21-day moving average might be around there by then. The 50-day moving average will also be around there by then. So any sort of retracement towards there, I think, would be a really nice opportunity. Now, in terms of the fundamentals, there's a couple of things going on at the moment. The most recent move has been driven by a safe haven bid into the US dollar because in the news recently there's been all these concerns about Russia cutting gas to Germany and to other places in the Eurozone, which are all contributing to these overarching fears of a recession. Now, people are worried about a recession in the US as well. The US might actually already be in a recession. We've got GDP data coming out in the next couple of weeks that might show that. But however bad things are in the US, pretty much everybody agrees that they're probably going to be worse in the Eurozone. And that divergence is also seen between the Fed and the ECB. Yes, both the Eurozone and the US face high inflation, but the outlook for Fed tightening is much more pretty much than the outlook for ECB tightening. I mean, I don't know if markets even expect the ECB to get interest rates back to 2%, whereas in the US we're still talking about interest rates sometime in 2023 reaching 3.5 or 3.25 or whatever. So the economics are pointing lower, the central bank situation is pointing lower, and I think the technicals are pointing lower as well. But anyway, that's just what I think, guys. Not financial advice, of course. Hope you enjoyed the video, and I will see you all in the next one.